Hello, everybody. Thank you for joining. We've got a record number of signups for this very unique webinar. I would like to say that we're the only company in the world that can offer this many international real estate financing solutions for our global and international investors. So I'm really excited to get this going. I've got my colleague Leonard Lee. He's the head of international mortgages for us, based in Singapore. I'm based in Singapore, as most of you know. Leonard, do you want to say hi to everybody?
Hi everyone, welcome. Thanks for joining us today. Hope you find this
Okay,
useful.
cool. So I just wanted to do a little bit of housekeeping in the chat. There is my contact details and Leonard's. If you ever, during this conversation, want to set up a call to speak to me with regards to anything that I'm going to be speaking about, our information is there. Towards the end, at the end of the presentation, we will have a live Q&A where you can ask us anything about our mortgage solutions. At that point, Leonard will probably be the one that will be answering the questions. And at the very end, we're going to have a very special poll to get a sense of what you guys are looking at when it comes to your international real estate financing interests. So without further ado, I'm going to share the screen and get this going. All right, so that's us. Okay, who we are. So we founded this, I'm one of the two co-founders. We founded the company in 2019 as an international real estate financing company to solve the problem of people needing mortgages to buy homes where they don't live. We're backed by Spark Labs in Korea, Miri Asset Management, Worry Bank, and other notable venture capital and individual investors. Now, what's really exciting is we're the only Asian company, at least, that owns a U.S. mortgage bank. So we own American Mortgages. It's a U.S. mortgage lender that specifically lends to overseas borrowers. We have an office in Dallas, and what makes us unique is that we have loan officers all over the world to be closer to the client. And again, we're the only ones that are focused on overseas borrowers. Global Mortgage Group, or known as GMG, we're an international real estate financing brokerage. We offer mortgages as the banner says, 21 countries. And we also are heavily active in global bridging loans. That means using your home as collateral to pull out equity for personal use. And we'll go into this in significant detail in the next few slides. Now, there are 5 reasons that people buy properties overseas. One, it's education related, and I would say this is probably the biggest component. You want to send your kids to good schools in the US, Canada, UK, and Australia. Those are the 4 big countries, and that's not to say there are other countries that people don't send. Europe is getting more interesting, and of course, Singapore, Hong Kong has really good universities. But generally, in terms of Western education, those 4 countries tend to be where you send the kids to school. In fact, in the US, there are 1.1 million foreign students studying in the US, the most of any country. And it's really common if you're sending your child overseas for school, you want to buy a condo for them to stay in perhaps after school. They work there to get some Western experience before they move back home to work for the family business or get a job back home. And after 4 or 5 years, the property would have gone up in value. You could sell it, pay for university, or keep it as an investment property. So this is a common journey for many people, actually myself included. The second reason is for residency. Now, there could be a secondary residency, otherwise known as the golden visa, and that is, Dubai, Portugal, Spain, for example. Or you want to move to another country to work. So a lot of people in Singapore and Hong Kong have moved to Dubai to seek, to start their careers, and that also counts as a residency reason to be purchasing property overseas. The third is pure investments. You've got some spare cash. You want to buy some real estate to get yourself in the game. Real estate has proven to be a great store of wealth and source of investment income. And not everybody, in the world wakes up and wants to buy Nvidia or Bitcoin or gold. People still like old-fashioned, bricks and mortar and real estate. That, US, Australia, Dubai. Dubai is obviously very hot right now, but later on these slides, I'll explain why we think the US is still by far the best market for investment purposes. And then there's retirement. These are people that, want to lower their cost of living. They've got a nest egg and they want that nest egg to kind of last for a longer time. Europe is a very popular destination. In Portugal, Spain, especially if you're living in the US, a lot of people have moved to those countries. Places in Asia like Thailand and Malaysia are very popular because of, for obvious reasons. In Thailand, there's beaches and, condos are really cheap. And last but not least, And a lot of these five have some overlap, but the fifth one would be a second home or a vacation home. And these would be, in Niseko or a place in Paris or a place in London or New York. They tend to be for people who travel a lot. They like, instead of staying in a hotel, they like to have a place in London that they could stay in, or maybe give it, let, their business associates stay there when they're not there. And if it's not in use it, offer it as a short-term rental. Now, what has happened this year? So shouldn't be any surprise. We've got the weak US dollar. I think that is on purpose. We've got global tariffs that has impacted a lot of things. There's reshoring of manufacturing in many countries, increased defense spending. There's been some geopolitical risk. Most recently, there's a little bit of China, Japan tension. But by and large, and there's been rate cuts, right? Not in all countries, but in the US, there's been some rate cuts. But what has happened, right? So asset prices have gone up, gold, stocks in the US, and so it has, and I'll get into some of this later in subsequent slides. Next year, I think you're going to see rate cuts, especially in the US, specifically in the US, I mean, is really going to kick in. But more importantly, and I can't emphasize this enough because the majority of people don't understand this as two separate things. There's rate cuts and there's quantitative easing. So in November, the Fed said that they would stop quantitative tightening and they would begin quantitative easing. Quantitative easing has more impact on asset prices than Fed funds rate. Fed fund rates are basically the rate at which banks borrow from each other overnight. But quantitative easing is, the Treasury going out and buying, the Fed going out and buying treasuries to support the market, injecting liquidity into the market. And this affects asset prices a lot. So I'm really bullish next year. So, I encourage you, you can't wait for the ideal rate because rates don't really move the needle in terms of your monthly mortgage. If rates go from 7 to 6, your monthly mortgage, especially in the US because it's 30 years, only goes down like $200. But I can guarantee if you wait for it to go from 7 to 6, the home prices might be up 5%. And I think that does affect your monthly cash flows even more. I think this tariff noise will subside a little bit. There'll still be, we're living in an age of a little more geopolitical risk, so that's something that we have to deal with. I do think next year I'm in the inflation camp. You can define that however you want, but I think asset prices are going to be strong next year because of all this liquidity in the market. And, for those that belong in the debasement trade camp, which myself included, I think owning hard and scarce assets are going to be proved very valuable, and real estate is one of those. All right, I'm going to give you a quick snapshot. These are one-line summaries of what happened in each of these markets over the past year. The UK had the most news. I mean, the change on non-dom status, which means if you live in the UK for if you don't live in the UK for a certain period of time, you have to pay a higher level of tax. And they also increased sort of a stamp duty on a certain land tax on property. So all of these two things combined has caused a mass exodus of high net worth people in London to move abroad. A lot of them have moved to Dubai, and ironically, a lot of them have moved to the US. Germany, strict rent regulations. It's obviously, most of Europe is a slightly more socialist bent. So that's, not many people in Europe are, when you make money, they're not buying more properties like in Asia. So Spain, there's a lot of political noise, taxes that may be impacted. A lot of these European countries, you're Italy that just can't have enough people come in, buy homes, support the economy. But there are other markets like Portugal and Spain. They're like, oh my God, too many foreigners. You're driving up prices. Let's take a hold back. But at the end of the day, these are very low cost of living places, and people, want to live there. It's not necessarily for investment purposes, although properties have done quite well in Europe this year. Portugal obviously is the golden visa. A golden visa has driven a lot of property prices, but it's still foreign demand is super strong. Greece, again, it's a golden visa trade. And there's been some anecdotes on kind of property regulations because there's just too many people coming in, flooding the market, driving up prices, and the locals are unhappy. And I think this is consistent in many markets. In France, they implemented a wealth tax. Again, another one of these countries where, like, oh my God, too many foreigners are coming in. Take a, hold off a minute. Let's recalibrate our economy so the local population can afford to live. The US has none of this. They're like, come in droves. We don't care. And if you look at the news flow, okay, next slide. The US, It has super low restrictions. A lot of these anecdotes that Trump had said, like, oh, no more H-1B1 visas, no more work visas, no more, no more, foreign students. They've done, over the last 2 weeks, he's turned that around because he knows if universities don't have foreign students, they're going to go bankrupt. Number two, we need foreign talent because these tech companies rely on them to innovate, and it actually lowers your cost of labor as well. And if you don't have foreign labor at these companies, you can't find anybody to work, and then you lose out on the AI race to other countries. Canada, really difficult for foreigners to buy. There's been a ban in place for some time, but we do see a lot of Canadian expats who use us to get a mortgage to buy a home back home. And the rest of these slides are Latin America. I'm not sure it's totally applicable to our audience here, but we see an unprecedented amount of Latin American business, and it's caused me to learn about the markets a little more. And I didn't realize, how attractive places like Dominican Republic were. Panama obviously is a, offshore center like Bermuda or Luxembourg and Cayman, but it's a strong market, strong US dollar economy. Costa Rica is almost like a combination of it's like the Singapore of Latin America. It's a small country, super clean air, great food, low cost of living, great surfing, and a lot of Latin America demand comes from Canada and the U.S., less so from Asia for obvious reasons. But it's a great market for us. We have a really good business there and good partners to work with. Closer to home for us. Listen, Dubai is on fire, no doubt. It has a low regulatory environment, low tax rate. You can buy cars cheap, supercars cheap, and I think the high net worth have been moving there to set up shop, and a lot of sort of mid-level executive that get price has have been priced out of Singapore and Hong Kong and other markets have moved there for opportunity. So it's a super hot market. Abu Dhabi is Dubai 2.0. And the properties are still fairly cheap. Now, to me, country or markets where you can buy off plan and before the property is built, you can make 30%. It sounds good, but I've been on this rodeo before. That's not a normal market. But right now it's super hot. We do a lot of business in Dubai and Abu Dhabi. And in fact, we also there are uniquely positioned to help you find property. So not only can we provide financing, we can help you find condos to invest in as well. Israel is I don't know much about the market, but we do see a reasonable number of leads that come in for Israel. A lot of it is the foreign diaspora that wants to buy back home. So it's still quite a robust market, which I've learned recently. Australia doesn't need any introduction. Great market. A lot of families want to send their kids to school there. Affordability has gotten so out of control there that it's similar to the US a little bit, where the average person can't afford to buy, and what's happening is it's driven by foreigners, but a lot of the population has to rent. But Australia's great, and I'm a big fan of Melbourne, to be honest. I may end up moving there one day. Japan, everybody loves Japan, especially here in Asia. The yen has been weak, so people have been moving in. There's no foreign ownership limits in certain types of properties, and we're one of the very few places that you can get a mortgage, except not in Niseko or any ski towns, generally in Tokyo and more sort of metropolitan cities. Singapore, where we're based, it is one of the most restrictive markets for foreigners. The government does a really good job of making sure home prices don't heat up so much, but it's been a super hot market. A lot of wealthy have moved there here and set up family offices. And we're able to offer financing. Financing's fairly cheap here, and foreigners can get a mortgage. Thailand, again, no introduction needed. Everybody loves Thailand. Everybody loves Thai food. And we offer mortgages in Thailand up to 50% loan to value. And we have no shortage of demand for Thai mortgages sorry, you name it. It's Bangkok, Hua Hin, Pattaya, you name it, we can finance it. All right, so here's a snapshot of not the rates, but the countries we offer mortgages in and what prices have done this year. You look at, obviously Dubai is up, 15, 16%. The US is up, this is 5% nationwide. If you look at some of the bigger cities, like right now in California, because of the tech boom, property prices are going ballistic. Like, Manhattan, not so much, but places like Irvine are up 20% year on year over the past 5 years. San Jose right now is up, you know, 20% in 6 months. The other thing, and I'm going to go into the US a little bit, but one thing we have to note is currency makes a big determinant of this. The US dollar has weakened, 10 to 15% against the euro at different points in time this year. And so you can imagine if you have money and you're sitting in Germany, that home in New York is suddenly 15% cheaper than last year. Plus, you have a 15% pricing advantage over the local buyer. So, currencies, especially in a year like this year where it's been so dramatic, it's a real driver for your purchase. And the dollar, as Trump needs the dollar to be weak, he achieved this year. I think next year it will strengthen again because of certain macro things that I can go into if you want to speak to me directly. But that's a snapshot of how things are. Like if you look at just rental yield, nothing beats the US. I mean, it's 5% on average, but if you look at, we have a listings page that has 50 listings between 10 to 15% gross rental yield. And I think a lot of people don't know this, and I'm going to get into this in subsequent slides. But you can see it's been a very active year for in the overseas property market. The next slide I'm going to leave on for a little bit, so I'm going to give a little bit of a drum roll, but these are our rates. So these are the rates and this is super indicative. It's based on a lot of factors. It's not it's not 100% accurate because there's foreign nationals, there's expats, there's if you have local credit, all that kind of stuff. But generally speaking, this is what we're looking at. I will say what the US stands out is that it's a 30-year fixed rate mortgage. So you lock in at 6% for 30-year fixed, you know, rates go down to 5% next year, you call us, I'll refinance you at 5% at 30-year fix. So that's, a lot of these other markets are based off a floating rate, off of a floating rate. But I'm going to leave this on for a little bit to let you digest it. Singapore obviously is quite low, but there's all sorts of stamp duties and additional, foreign buyer taxes and stuff like that. But that's where they are. They're not as low as a lot what I thought in many countries, especially in Europe. But I'll leave this for you. And again, this slide is available for everybody on this call, which if you want, we can send you a copy. All right, I'm going to take the next few slides to talk about the US. It's the biggest property market in the world. There's 56 billion foreigners buy US property every year, or like last year. Last year, in fact, here's an interesting note. Foreigners bought 44% more homes in the year ending March 2025 than the previous year. And a lot of that had to do with the weakening euro. So that's driven a lot of interest into the US. One, there's a massive housing shortage. Now, depending on who you read, it could be a bubble in Miami, a bubble in Austin. It doesn't, these are all anecdotes. In general, there's a 5 to 7 million home shortage in the US. Number two, 65% of folks that have a mortgage in the US have it under 5%, and 25% of people with mortgages have it under 3%. What that means is these guys aren't selling, right? So you've created this, this abnormal tight supply. So if somebody is selling, they need the money because you have to pay capital gains tax. So if you're a foreigner and you're buying, you have a lot of negotiating power in the market. And so one thing I will say right now is that affordability in the US is past the point of no return. An average American will never, ever be able to own a home to live in. It sucks because that's part of the American dream, but much of Europe rents, right? So what does that mean? That means that the new American dream is, okay, I'm going to rent, keep my, be an asset light model, but I have 10 sources of income. When I was growing up, you work hard, go to a good school, you work at one company for 30 years, you've got a pension, hopefully you made some good investments, you're tired, go play golf, maybe move to Thailand. But nowadays, it's a different environment. And the reason why I'm saying this is that there's an opportunity for all of us. As landlords, you have pricing power, and that's what's happening right now. The US gentrifies really well, so people can't afford to live in California. They move to Texas to work at the Tesla factory, and because it has a no state tax, lower cost of income, but they rent. So as a landlord in Texas, and this is why rental yields are moving up so aggressively in the US. And this AI boom, you can go on ChatGPT and type how many direct and indirect jobs are being created because of the AI, EV factories, Stargate, and CHIPS Act, and you'll see it's anywhere between 800,000 to 2.5 million new jobs. This is real economic. This is a real economic engine. Now, this is why, there's not a lot of information on the US because there's a home shortage. They don't need to bring properties to overseas to sell because they don't have enough domestically. And this is what's driving property prices and rental prices. So this is real, it's happening, and it's happening now. A lot of job growth in Texas, Florida, Georgia, Arizona, Utah. And this is appealing for real, pure property investors. And last but not least, I think a big driver going forward, and this is in the US and also globally, is deficit spending. It's going to create higher asset prices, and you combine that with future rate cuts. I mean, this is going to be a very powerful market for a couple of years. All right, so I'm going to teach you how the game is played in the US, how the wealthy create free property with infinite rental yield because the property is free. So I'm going to give you, this is a real life example. You buy a home for 500,000 bucks. It increases 10% a year. You come to us, we give you the rates are lower than 7% at the moment, but let's just say, for argument's sake, 7% fixed for 30 years, 75% loan to value. I give you a check for 375,000 bucks. You put down 125,000. Your rental yield is increasing 10% a year, 5% a year, and the yield is 10%. So what that means is your home is 550,000. At the end of year 3, it's worth 665,000. You've earned this much rent per year, and you have this mortgage, right? And so over the next 3 years, you would have made almost over $100,000 in rent, net rent. Okay. Then you come to us and you say, well, 3 years later, mortgage rates are now 5%. Okay, fine. So remember, you've just made $108,000 and you've only put down $125,000. It's pretty close, right? So you come to us, you say, hey, mortgage rate, Donald, mortgage rates are 5%. Can you refinance my loan? I say, absolutely. I take the $665,000 and I give you a loan for 60% of that. That comes out to $400,000. And now the mortgage is at 5%. So remember, I just gave you $400,000 and you take the 400 and you pay off the 375, and now you've gotten $25,000 cash in your pocket. So after 3 years, you refinance, the house is free. This is a game that is played by savvy investors in the US, and no other market offers this type of opportunity. So at the end of year 4, the property prices keep on moving. I mean, we can debate, how much and, all that kind of stuff, but this is very conservative. And so now the house is free and you're clipping, the next 3 years, you're clipping 150,000 in rental over the next net rental over the next 3 years. So that's how the game is played. It's played by savvy investors. I'm happy to walk you through how it all works. At the end of the day, the US is a place that wants to partner with you to make money. This is really important. You try to go into other markets, it's really cumbersome, but the US has, you can set up an LLC, deduct a bunch of expenses. There's tax tricks to maximize, to minimize your tax liability. There's, accelerated depreciation, segregated cost analysis, all these type of things that we can help you with. But this is how the game is played. All right, I'm going to do the next few slides on US mortgages because we own a bank and this is our competitive advantage. First of all, I want to dispel a few myths. One, you don't need US credit. Two, we accept foreign income. If you go and call Wells Fargo and you say, hey, I want to buy a place in San Jose, and the loan officer says, okay, that's great. What's your credit score? They're like, dude, I live in Singapore. They're going to hang up on you because they don't know how to deal with that and they don't want to deal with that. That's all we do. So, we don't require US credit. We accept foreign income, 75% loan to value for foreign nationals, up to 80% for US citizens. If you're an expat or you hold a green card living abroad, everything we do is exactly like walking into a bank in the US, except we're motivated to help you. You go to the US, they are demotivated to help you. So there's a big difference. And I think, and we have a loan program that was specifically created for foreign nationals buying investment properties, which is if your rent is more than your mortgage, you qualify. We don't need to see anything else because the property that you've bought is going to underwrite the mortgage on it. It's called the GMG Rental Coverage Program. Again, no personal income required. What we do is we appraise the property for what it's worth and what it's going to rent for. And in this example, it's going to rent for $2,400. Your mortgage plus, other ancillary expenses is $2,400. You qualify. We don't have to see that much. You get your loan in 30 days. Super, super. And in a market where rental yields are 10, 15%, it's never been easier to qualify. So this is something super unique, only unique to us. And we'd love to explain more on how this works. The next one is, there's a lot of expats or folks with green cards living overseas. You may have gone to school in the US, you've gotten residency, you've got some sort of, residency, and now you're back in Asia or Europe working at, at a bank or whatnot. And, you still have some credit. Everything we do is like you're walking into the bank, except we don't require a W-2. And this is a standard qualify on income, which is a standard 43% debt to income ratio. So if your mortgage is less than or equal to 43% of your income, you qualify. And we can accept your foreign income. So whether that you're in, Indonesia, Malaysia, Singapore, Frankfurt, China, it doesn't matter. We accept your foreign income. Super interesting. Only we can do this. GMG Investor. So this is, again, this is for foreign nationals, but this is based on your income. So it's exactly like the US mortgage, except we can accept your foreign income and we get a CPA or an accountant say, Bob Smith, you made this much money every year, and you're like, okay, done. You've proven that you've proven that you can carry the mortgage based on what you earn. And what's really interesting, we won't look at your existing mortgages if you have 10 mortgages in Singapore, we don't care. We're only interested in, what you have in the US. All right. We have a super unique program for those out there that are client advisors, mortgage brokers, or private bankers. We've created the world's first mortgage that you can offer to your clients. And with a simple referral, we do all the work. And because we're a bank, we make a small net interest margin. We do the work, and if it's on our balance sheet, we'll pay you 1.5% of the loan amount. And this is super interesting. It's never been offered before in the world. We're the first, we're the only ones. And it's been a way for us to, expand offering US mortgages globally. So message me if you want to learn more of this, or if you have friends or family members that, want to send their kids to school in the US and etc. And they may want to buy a place. All right. So that was the first segment of the presentation. Now we're going to get into bridging loans. So we offer bridging loans in 8 countries. Now, what is a bridging loan? A bridging loan is where these are short-term 1 to 2 year loans based on the asset value of the property, not your personal income. Now, property prices in most countries globally have done really well over the past, 5 to 10 years. And there's so much embedded equity that when you need money quickly, you can tap your home equity for cash. So a typical scenario would be, I've got, $5 million, I bought a home for $1 million 10 years ago. It's now worth $5 million and there's no debt. And you say, I need $3 million really quickly because there's an investment opportunity that I need to execute on in 3 weeks. And it's just, folks just don't have $3 million sitting in a bank anymore. And if you want that money quickly, it's hard to get. So we offer this in Singapore. We've done, hundreds of millions of dollars over the past few years on Singapore property alone. US, Canada, UK, Australia, New Zealand, Spain, Ireland, and Thailand. Oh, actually, that's 9 countries. I think Leonard stuck a new country in there. So we have bridging loans in 9 countries. So even more impressive. So this is a super useful tool because of 2 reasons. One, asset prices have gone up, but bank lending has gone down. If you look at loan growth for many countries, banks are shying away from lending. So this creates an opportunity for, to fill the gap of financing that isn't available from banks now. What are the uses of funds? Well, I said earlier, there's an investment opportunity that you need to act quickly. It could be, I have a chain of restaurants and, this is a real life example, like actually, there's another chain that, wants to get out of the business and I need money quickly to buy over his restaurants. It could be, I have a company in Indonesia that, needs to buy some raw materials and my letter of credit from my bank is taking too long and I can buy bulk wheat. And so they pledge their Singapore property to wire back to Indonesia to use. I could be acquiring new properties, and a super common reason is I need money to develop or renovate a certain property to increase the value so I can go to the bank and get a loan off the increased value. And banks just aren't doing this kind of stuff right now. So this is some stuff that we do. Obviously, tuition, healthcare expenses, unfortunately, sometimes in life there's some health issues that you need money quickly. And we had and or you need to roll over some expensive debt. So these are some of the one of these, 8 of the many different reasons people use bridging loans. But this is called asset-backed lending. It's a form of private credit. It's just based on the value of the property and not your personal financials. And in Singapore, this is not bound by Singapore's TDSR, total debt service ratio. These are private loans, so they're kind of these are privately negotiated loans, and these are all in first position. So if there's an existing mortgage, use the funds to buy out the existing mortgage. And these are super popular if you need cash quickly. All right, I just gave a few case studies on what clients use us for. New York, obviously the #1 education center in the U.S. Hong Kong parent buys $1 million condo for child while studying in New York. We financed $750,000 for that. And like I said earlier, it's a common journey. When you buy something for your child, the first year they stay in the dorm to get that college experience, but then they live outside. And if they're living, there's some landlords can be real, what. And if you own a place for your son or daughter to live, there's peace of mind. When you go visit them, you don't have to spend $1,000 a night in a hotel. You can stay at the place, spend time with your child. So this is a super popular, this is probably the biggest reason why people buy properties overseas. A bridging loan in Singapore, local businessman accessed $7 million from his $10 million landed property for an investment opportunity. This is a 1-year loan, interest only, so it really worked out well for him. And what he needed the money for was going to make him so much more money that, he was super happy about the outcome. In Dubai, like I mentioned earlier, a super hot market. Here we help source the property and the financing. So we help source a $500,000 condo, brand new off plan, and we arrange financing for that client as well. UK, very popular with Malaysians, well, most of Asia actually, to be fair. But they purchased a $750,000 buy-to-let home, which is basically a home that you purchase to rent out. We help them finance 70% of that through our GMG UK mortgage. In Australia, a returning home expat, they wanted to buy, they were going to move back home to work after a stint in Asia, but didn't have, all the Australia kind of credit and background and footprint anymore. So we used a bridging loan to purchase the property. And when he moved to Australia and created a credit footprint, he refinanced through a typical bank loan. In Thailand, Leonard's working on this deal right now. European couple bought 3 homes with cash because they didn't know about us earlier in Hua Hin, and now we are pulling 50% of that value out towards additional purchases in Thailand. This couple really wants to build up their portfolio in Thailand. So these are all things that we can do, but this is just a really small snapshot of all the countries and all the different scenarios that we can help you with. All right, so that's where we're at. There's a poll somewhere. Okay, so there's the poll. Do you guys see it? Can you guys answer that? I'm going to answer it. Can everybody see that? Leonard, can you see it? I'm going to do this. Okay. I hope that was informative. It by no means is meant for any type of investment advice. We're just giving you the solutions and where we see the market. So we have a lot of questions. Okay. Can we see this recorded? Yeah. So this will be sent to everybody on this who signed up. The recording will be sent to you. If we wanted to get started in the investment property game, where would we recommend? It really depends on where you live. If you're living, I always like the U.S. just because it has there's a real economic engine driving growth. People always want to send their kids to school there, but you have to look at rental yields. That means if I'm going to spend $100, I want to make sure I have positive rental cash flow. And there's really not many markets that offer that. I mean, Dubai and the US are probably the 2 that I can think of. So I would always say the US, it offers something for everybody, and it offers a theme that if you like education cities, it's there. If you like, people, if you want to take a moment and Google Blackstone buying single family homes, you'll see that the big institutions know what I know, which is owning rental properties is an incredible opportunity right now. And they look at two things, population and wage growth. Like where are people moving to and are those jobs paying more? Because when you make more money, you can afford more rent. Next question. Dubai is so hot. What do you think of this market? Should I be investing there? Can you help refer a realtor to us? Short answer, it's super hot. I think it has legs. It ticks a lot of boxes. It's safe. Geographically, it's close to a lot of the wealth centers of the world, and we can certainly help you find properties through our partners there. So please contact us. Love to be able to help you. There's a lot of noise about foreigners in the US. Can you tell me what is really happening? Is it safe to invest in the US? 100%. There's a lot of noise, but at the end of the day, it is, even now more than ever because of this shoring of manufacturing and there's technology really being built, people need to be there. So it's always, the news is always worse than it really is. Okay, let me scroll down. Leonard, you want to take this one? I own a property in Sydney. Do you see that one? Let me read it.
Yep, I got that. So the question is, I own a property in Sydney worth 1.5 million. I've paid off my mortgage. I need 500,000 to finish some renovations to sell the property. Will you be able to lend on this? Yeah, for sure. Sydney's been the number one growth city for properties, followed closely by Brisbane, Canberra, and Melbourne, actually. And sort of equity that's stuck there, basically, and it's not earning any returns. So people do want to take out that trap equity, do something with it. In most cases, bridge loans can go up to 60-70% loan to value. So 500,000 out of value of 1.5 million is not a problem. We can really get you started if you tell us the address, the approximate valuation of the property, and what's your exit strategy there. Really, some people would tell us, look, we need the money for just for 4 months, 6 months, because I've got inheritance coming in, whatever it is, or I go refinance into a bank loan. So these are quite important factors that the lender will look at. But once we get some of this basic information, typically within 1 to 2 days, we'll be able to come back with options or any questions that the lender might have. Yeah.
Yeah, Leonard and his team, they work super fast around the clock. So please contact him directly if you want more information. Next one, I'm a private banker in Singapore and I have a client that purchased a home in the US for their child 5 years ago. This is a common journey in Los Angeles. Oh, I went to school in Los Angeles. The property has appreciated significantly. Are we able to take equity out? Absolutely. Again, it's easy to pull out 60% of the home value, and these loans take 30 days to fund. It's super common. You can take that money and buy more property or move it back to Singapore. So contact me directly if you want to know how this works. We own a landed property in Singapore in District 10 worth 7 million with 1 million loan outstanding. We need money to grow our I think there's another restaurant business. Grow a restaurant business. Is there ways to use our property for liquidity? Absolutely. So $7 million, we can pull out 70 to even maybe 80% of the value. We can get this done in a few weeks. And these are short-term, 1 year interest-only loans. So you use it to do whatever you need with the restaurants. And then at the end of the 1 year, you pay that back in a bullet. So again, if you need more information, please contact me. For someone based overseas, how realistic? Leonard, do you want to take that one?
Someone based overseas, how realistic is it to complete the entire mortgage process remotely, for example, Dubai, Australia, or the US? Certainly, most countries will allow you to do this remotely. They would, of course, require a Zoom call to verify your identity. You would have to submit all your documents, but most of the lenders will allow you to sign your documents electronically through DigiSign or some other program, that both trusted program. I think only maybe in certain countries in Europe, Spain and Portugal, where they might require one physical meeting with you, and that's normally when you're going down to look at the properties anyway. So people don't find that an issue at all when they want to apply for one of these loans.
Great. I'm a dual US and Antigua citizen. This is Mr. Amar. I own land in Antigua and like to develop commercial project there. Unfortunately, we have not expanded to Antigua. I heard it's a beautiful place in the world. Unfortunately, we cannot help there. But if you have a place in the US, we can extract money out of your US home and use that money to buy in Antigua. So this is a very common transaction to kind of refi one and buy in another country. Can you explain how the 24-48 hour bridging loan approval works? Well, it's pretty much similar in all markets. You speak to us, we get a sense of what you need the money for, what your exit strategy is. We give you a pre-approval pretty quickly, and then we go through the documentation. And because it's based on the asset value, these are fairly straightforward. Usually, unless there's a big disconnect with what you think the price is and what it really is. And these tend to be in kind of not normal locations. So if it's just a city center, it's pretty transparent. Do you plan to finance properties in Bali, Georgia, Oman, or Africa? Unfortunately, none of those markets. I wish we could. Bali is a really tough market because the prices in Bali are so much higher per square foot than other places in Indonesia. It's similar to Niseko. Price per square foot in Niseko is so much higher than everywhere else in Japan. The banks are reluctant to lend. But we're trying. Every day we're trying to add more countries. So unfortunately, Mr. Lahos, we are not able to help in those markets. All right, kind of coming to, oh, here we go. Hi, after 3 years with a loan in the US, I see the property has increased in value, but believe it will not keep increasing in the following years due to neighborhood economic scenario. Do you recommend to sell, get a new property, or refinance? I tend to disagree, but I don't know where the property is. Generally speaking, I don't, I really have to see. I'm not here to give advice on whether you should sell or not. I will say that I believe because of deficits spending and increased quantitative easing. So the last time we started quantitative easing, asset markets went ballistic. So there's so much liquidity. At the end of the day, it's not about what things are worth. It's about how much liquidity in the system that has to find things to buy. So I would not sell. But again, Mr. Bernardo, why don't you contact me directly? It really depends on where the property is. But rates are coming down. So, wait a little longer. If you've made some money in the US, there's something called a 1031 exchange. So if you sell and you buy something of higher value, you don't have to pay capital gains tax. But also, I don't know how you're holding it. Are you holding it in an LLC or things like that? So please contact me directly. We can walk you through the scenarios. How competitive are your interest rates compared to traditional local banks? All of our funding is actual onshore, so it would not be different from, we're not marking them up. If you're borrowing in the UK or Germany, we are using UK and Germany lenders. What makes us unique is we are specifically focused on overseas borrowers, and that's who we want to help. If you go to these banks, they don't want to help you because it's too much work. So all of our rates are onshore regulated market rates.
Yeah.
I think that is it so far.
There's a question on among the 8 bridging loan markets, which ones are seeing the highest demand from investors right now? Maybe I can take that and why.
Sure.
So yeah, just to recap, we've got these countries that we offer bridging loans for: Singapore, US, Canada, UK, Australia, New Zealand, Spain, Ireland, Thailand. Now, we spoke a lot about areas where the prices actually have gone up and you've got equity to tap. Places like the US, Australia, and Singapore, and people just want to unlock equity because they want to do something with it. But interestingly, and this is what Donald said at the beginning of the presentation, places like New Zealand and Canada, where actually there's been a ban on foreigners to buy properties there, and people are waiting to sell. They're waiting for the ban to be lifted. At the same time, that's money that's also stuck there. So we are also seeing some evidence of that. Prices have not gone up as much, but people have either paid off their loans or totally paid off in cash, and they want to do something with those funds. So, that's also where we're seeing some of that demand. So it's actually everywhere where people are actually looking to tap on equity and then putting that into more productive use. Yeah.
All right, I think we've managed to get this done in 15 minutes. I think we're done with the questions. Any last minute questions, anybody? Oh, here we go. That's you, Leonard.
Yeah, it said I have a property in Spain without mortgage. Can I mortgage it and buy a rental property in a country where you don't provide finance? On a case-by-case basis, yes, you can pull out equity from Spanish properties, and then but the other choice that you might have is it depends on which other country you're intending to purchase, right? I mean, we may be able to find a solution for you there, but of course, if they don't provide finance there, then we can help you to pull out equity either from a bridge loan or a regular refinance cash out mortgage in Spain.
Yeah, so Mr. Lajos, who asked this question, I would encourage you to email Leonard. The details are on the chat. It's also on the last page here. So he would be the one that could help you. But I think let's put a note, Leonard, to reach out to this client.
Okay.
All right. It looks as though looks like we're coming to an end here. Shall we wrap this up? All right, everybody. I really appreciate all of you joining. We will send, the presentation and the transcript of this to you. Again, we appreciate the support. We're trying something that nobody's tried before, is to be the one-stop shop for helping you finance your overseas property. It's really difficult if you try this on your own, and we're here to help. So if you have any questions, please contact us directly. Look forward to, partnering with you on your, successful property purchase globally. All right. And that is it. Have a good evening, everybody.
Thank you, everyone.